Hello, good evening, everyone. Welcome to all of you for today's session. Students, just let me know whether you people can hear me well. Can you hear me well? Okay, right. Now, so students, the point is we discussed in the last class. Let me connect my iPad with it. Yes, we have covered in the last session. In the last class, we have discussed some basics of audit, basic concepts, and then stewardship, what stewardship is, and then types of assurance services we have talked about. Yes, and then afterwards, appointment of auditor, acceptance of audit as well. We have talked about. Now, today, I will discuss with you people that how the audit is accepted. So acceptance of audit process. Yes, acceptance process of audit. So I will be talking about that. So, uh, so audit cycle. Our topic is audit cycle or audit process. Audit cycle or audit process. Now, so what audit cycle is? What audit process is? Student auditor comes to the company after acceptance of audit. And after acceptance of audit, auditor does audit planning. Audit planning. And in the planning process, auditor understands the company, the business, the way its ways of working. Auditor does that, right? Now, and then auditor, as per understanding, auditor decides whether auditor has to accept the you know, just a minute, please. Just 1 second. Yes. Now, once again. So during the audit planning, auditor assess that whether controls of company seem to be working or not. What are the control, internal control process of the company? The company which actually has in place controls, internal controls, they seem to be working or not. Now, if they now here company decides or decides that I will go for, if controls seem to be working, yes, then perform test of controls to assess controls are effective or not. To assess controls are effective or not, perform test of controls. And now, so if control doesn't seem to be working, so it means auditor will perform detailed substantive tests on financial statements of company. Substantive tests. I will be explaining this terminology, the whole. Don't you worry. We have this today's full lecture for all these things. Very important lecture today is, yes. Now, so detailed substantive testing. And if control are, now when auditor perform test of control, that they seem to be working, now we are checking them. That what it looks like, what is the actual situation, that in fact they are working or not. Two possibilities are there. One, controls are effective. They are working well. When we tested the control, so it turned out to be that controls are effective. They are effective. And when controls are effective, it means we need to perform less detailed substantive tests to be performed on financial statements. Because controls working well, chances of error in financial statements are low. Chances of fraud in financial statements are low when controls are working well. If controls are not effective, controls are weak, not effective. It means detailed substantive tests need to be performed on financial statements. Detailed substantive tests need to be performed on financial statements. Now, next point. Let us proceed further. So means this is the same case, detailed substantive tests. You can see. And then afterwards, once it is done, there is review stage of audit and then audit report. This is audit cycle, audit process repeated every year. That's why it is called audit cycle. Now,
sir, can you move the scroll upward?
Sure, sure. Now, so I will repeat. This is just introduction. What I have given here, this is 80 to 90% syllabus of AA. 80 to 85% syllabus of AA. This whole process I have explained. So basically, at the planning stage of auditor decides which approach towards audit has to be used, because they have to audit financial statements. Which approach, which direction they have to use. And there are two directions we told. One is test of controls plus substantive tests, or only detailed substantive tests. Now, test of control plus substantive tests or detailed substantive tests? Yes. Now, next. So students, this is two approaches, two directions of audit. Now, you may ask that why control testing? Auditor has to report on financial statements of company, report on the credibility, on the truth and fairness of financial statements. Yes. Now, so student, so this is the task of the auditor. So why auditor is testing controls? Remember, for this purpose, we need to talk about a few things. That basically, you know that it is winter at your place these days. Is it winter? Tell me. Weather is cold. Am I right? Weather is cold there. If I'm not wrong. Tell me.
Yes, it's winter.
Yes. So at night, when you go out, you can go in a simple t-shirt, half sleeve. You cannot, because you can get means that you can get sick because of the cold weather if the temperature is low. So then what you do? What do? You actually wear some sweater, some jacket, right? To keep yourself, your body warm, to avoid the adverse effect of cold weather. You do that, right? So when you do that, so the basic purpose of so what you did, you want to stay warm, to avoid adverse effect of cold weather. This is the target. This is the objective, right? You want to achieve. This is the objective you want to achieve. Now, the point is, Mr. A, he is wearing a jacket. Mr. B is wearing a sweater. Mr. C wearing a long coat. All of them, they are going outside. Now, my question from you is, which one of these three is doing wrong? Purpose is same of these three persons. Which one of these is doing wrong? Anyone? Yes. Tell me. Anyone out of you? No one. All of them are using different way to achieve the same objective. And all three are valid. Objective is the same. Control implemented, that is different. Control implemented is different. Objective is the same. So similarly, normally objectives regarding financial statements, we will talk about it. You may have heard the financial statement assertions. How many of you have heard about it? Assertions. How many of you have listened this word before? Anyone? Anyone out of you who has listened this word before? Anyone? Okay, so I will give a brief introduction here. In detail, when I will discuss later on. So assertions they are called simply assertions as well. They are objectives of financial statements. Objectives to be achieved while preparing financial statements. They're called assertions. Objectives to be achieved while preparing financial statements. Now, So, who prepares financial statement? Company. Company prepares financial statements, right? Management is responsible to get financial statement prepared, which are accurate, which are recorded in the correct accounting period. It is called cutoff. Correct accounting period. Their valuation is they're completely recorded. Transaction is complete. Yes, transaction is complete. Now, the next point is so whatever is recorded that actually exists. So whatever is recorded that actually exists, that is valid transactions. So these are the objectives to be achieved while preparing financial statements. Now, so students, accurate, cutoff, completeness, yes. So whatever is recorded that actually exists. And then there are valid transactions. And now the next point is students. So why auditor? So first of all, the first thing is auditor decides which approach to be used because the company has implemented controls to achieve financial statement objectives. An auditor wants to test those controls. Auditor wants to test the controls. It gives idea. Once again, the same story, but a bit more explanation. That controls are strong, controls are weak. If controls are strong, it means there are less chances of misstatement. Less chances of misstatement in financial statement. Misstatement? What is meant by misstatement? Something which is recorded incorrectly. Something which is not recorded at correct amount, at correct place. Something which should have been recorded, but it is missed. Now, next. The next point is, so when there are less chances of, because controls are working very well, so everything is being recorded at correct way, correct method, correct place, timely, at right amount. It means less chances of misstatement. So it means less detailed substantive tests required to be performed on financial statements. Less detailed substantive tests required. If control prove to be weak, it means a high chances, higher risk of misstatements in financial statements. And there is high risk, detailed substantive tests need to be performed on financial statements. Detailed substantive tests need to be performed on financial statements. Next. So basically, what are the substantive tests? Although you may have got the idea so far, because I have the way I am using. So substantive tests, what they are, or procedures. They are methods, ways, steps, or tests used by auditor to detect misstatements in financial statements. Now, next. So, students, we can assess over here. So, first of all, at planning stage, auditor decides whether he needs to go for test of control plus substantive approach or detailed substantive approach. So, for example, he chooses the first option, test of control plus substantive. So why he is doing that? Again, to check control is working so that he can decide. So auditor tests the controls of company to determine the level of substantive tests to be performed on financial statements of company. that how many substantive tests he needs to perform. Yes. So in other words, we are doing the same. If you see a bird's eye view of this holistic view of this picture, we are doing the same. Now, so let us proceed further. So the next point is auditor and internal controls of client. What is meant by client? Client is the person, the party whose financial statements have to be audited by the auditor. Yes, auditor and internal controls of the client. There are 4 steps. So auditor, first of all, understands the controls of company. Then document the controls. Then performs walkthrough test. Walkthrough test. 4. Performs test of controls. 4-step process. And one by one, these steps we'll talk about today and in the next class. 2 classes, I will talk about theoretical, these topics, most probably. And the next classes will be a practice. Remember, the area which we are discussing, it is tested on average 30 marks. You should expect 30% of the paper. In adverse, when examiner is very aggressive about this area, in both parts, section A and section B of the paper, the both collectively. Okay, but sometimes it on average it may increase to 35 or 40 sometimes, but on average 30 marks. So it is very important to make you pass the exam. Now let us proceed further. So the first point is understanding the control. So each organization, I'm talking about the good organizations. So they have system of internal control. So there are 5 components of controls. Yes. I have explained it to you. Components of control system. All of you have got these notes? These notes. Have you got these notes? Anyone who have not obtained? Tell me. Anyone who have not obtained the notes? The website link where you log in, below that there is a point, a folder of the notes. You click there, notes volume 1, you will find. Okay, the where you log in basically in your dashboard, AA, where you Zoom link was, where you found the Zoom link basically. Okay, you will find it there. You will find it there. Okay, yes. Welcome. Welcome. Now, just one minute, please. So, okay, right. So components of internal control we are talking about. So there are 5 components of internal controls, 5 components only, which every good organization have implemented. So auditor goes to the company and one by one checks that how these 5 components are working. The first one is control environment. The first one is control environment. Now, what control environment is? Control environment is basically all the factors surrounding under which control will operate. It is just like that. It is just like that. A kid has to grow up at home. So what is the environment at home that affects the grooming, growth, on the mindset of the kid as well? That will affect that kid. So similarly, the controls have to operate in the company, and there are certain factors which are surrounding the controls. And those factors, if they're working well, it means control will be helpful for controls to operate properly. Otherwise control may not operate well. Control may not operate well. Just a minute, please. Yes. So, first of all, what falls under the control environment? Integrity and ethical values. how well within the company, integrity, ethical values, they're communicated, how much they are emphasized. The more you emphasize in your communication within the company, you give more importance to being ethical, honesty, truthfulness. So more chances are there that controls will operate properly. More chances are there, control will operate properly. Now, next, second, these 2 points are interlinked. When in the company, when you hire people, when you recruit them, when you promote them, when you train them, when you give compensation to the employees, so what do you prefer? What do you see while promoting the employees? Now, so you focus competence, quality of work, ethics, or some buttering, flattery, you know, or favoritism. What do you do? So whatever you do, you will see the people. If you prefer work, if you prefer competence, people will be working properly. Now, the next point. The next point is, yes, participation by those chartered directives of the company. Yes, how much they involve in the activities of the company, how much they scrutinize, how much they monitor. So again, if the directors are there, so things will remain in control. What is their experience? So the more experience, stature, stature, very important. That so they will bring wisdom to organization. So companies' control environment will be improved. Now, it is just like that. Experienced people are like the we have our elders at home, our grandparents, and if our parents are old, they're at home, they have wisdom, they have seen life, and the guidance we get from them that is not found in the books. Their presence at home, there are a few sentences save us from many mishaps, from many wrong decisions. Right? It happens. Now, so same is the case of the directors. And experienced people, when they're present, things remain under control. Everyone is following the rule, the control, the environment is good. And then, yes, management of how management thinks risk. Their risks are good or bad? Management, what is management attitude toward controls related to financial statements? If management is not giving importance to controls, how you can expect staff giving toward Yes, to importance to that. Then, yes, this is interlinked. Organizational structure, hierarchy, how it works, how authority is delegated, then how accountability is ensured. Is there a systematic process or not? Is there any systematic process or not? No. Next. So then now you have not to memorize this side. This side have to be memorized. This just read and comprehend. Yes. Now, auditors shall obtain understanding of all these components in the company. That how is the control environment? How good is the control environment? He will ask the management the questions regarding all these things. He will observe how things are going on. He will physically inspect documents over there. Okay, now you know that senior management, CEO, managing director, or chief executive officer, the corporate leader that has pervasive, vast effect in the company. You know, the leader change, the culture change, control environment change. In presence of one person, maybe source of positivity in the company, or that may be source of negativity in the company. So let us proceed further. So the next point is entities risk assessment process. What is that? Entities risk assessment process. Each organization, when they implement control, they have a system that they identify risk related to financial reporting, that what can be misstated in fund statements, what can be the source of any misstatements, what can be the source. So identify business risk relevant to financial reporting objectives. And then second point, estimate the significance of the risk. How significant is the risk? Significant means quantify what is the impact if this occur, how much will be the amount loss, how much misstatement will be in the file statements. Quantify, significant quantification, and the likelihood of occurrence. Chances of occurrence. You know, you see, the company has to assess that this might be the risk may arise. And if arise, this will be the impact. So what are the chances of occurrence? 1% chances or 70% chances? And then taking action to address the risk. These four-step process is called risk assessment process. Each entity has in place. So auditor will understand that how well the process of the company is, how well it is. Now, so the next is information system relating to financial reporting. Information system relating to financial reporting. What it is. So information system, that transaction initiation, recording, processing. So there are the controls, when you raise purchase requisition, when you make purchase order, there is authorization, there is a recording. When it is approved by the manager, processing started. When goods delivered, there is quality check and balance on that. Then goods received note issued. So there are controls. Information system means what that transaction initiation, recording, processing, and reporting transaction. There is a system so that established at various stages transaction is captured so that assets may not be stolen. We can hold people accountable so that liabilities may unnecessary should not arise. If they arise, we can identify who is responsible. Okay, so this is the purpose. Entity implements control related to initiation, record, processing the transaction. And the purpose is in front of you people. Now, so the next point is control activity. So the first three components we have talked about: 1, 2, 3. Control activity, specific actions that help to ensure some management directives. So there are specific activities which are designed to detect, prevent, and correct errors or frauds. Authorization. You get things authorized. You cannot process transaction without proper authorization. You cannot do that. You cannot do that. Second point is you go for physical access control. Not everyone can enter the cash department. Not everyone can enter the stores. Physical access. Not everyone can enter the server room. Physical access is segregation of duties. One transaction, full transaction, that is broken into small bits and pieces. One transaction is broken down into small parts. For example, requisition will be generated by stores. Purchase order will be prepared by one purchase officer, then approved by purchase manager, goods received by store, checked by quality department. Invoice will be paid by accounts. So one purchase transaction is divided. It is broken down and multiple people are involved. This is called segregation of duties. Yes. Now, so students, this is called segregation of duties. That you divide transaction, break down into small parts. So let us proceed further. The next point is you do performance reviews. Yes. And as well as one transaction is, for example, you have seen the invoices prepared by, reviewed by. You cannot process every transaction. Your transaction is processing limit, it is limited. You know that. Your defined area of work. You cannot access to database. You cannot make changes in the company's, employees' data, employees' salary. Not everyone can do. Only few person can do. To control activities that your control, their specific activities implemented. Now, so to obtain an understanding, auditor should identify which prevent misstatement of assertion. Assertion means something, valuation, accuracy, cutoff. I have already told you some idea. Now, the next point is, so IT controls and other controls, we have to study in detail. They are implemented for this. So then monitoring of controls. Companies once implement control. It is not one-time job. It's not like that they implement control and then they go to sleep. They don't think about the controls and their issues. Now, so students, so company has to monitor whether controls are effective, they are working very well or not. You have to monitor, because with the passage of time, control, people may not be following the control if you don't monitor. Or sometime business situations change. You need to, the old control become irrelevant. You know that with the passage of time, it is happening. Now, the next point is limitations of internal control. So 5 components of control we have done. So limitations of controls have a limitation as well. The one first is cost benefit. You implement a control which costs $500 to save an issue of $200. Is it wise? No. Cost of control should be less than the benefits derived. Potential for human error. Potential for human error. That, for example, I implemented control. I was recording. I was entering the password of my account. I note down that password on a piece of paper, and I forgot that on my table. My error. No, it is control activity, dear. So basically, yeah, you can say in that angle as well. You are right. That can also be. Okay, eventually, you write that as well. Okay. Now, the next is collusion between employees. Employees of the company, you know that. You said cash with the cashier, right? And there is a security camera. Security camera. In the security in the room, there is someone who is actually in charge of security cameras. And the cashier, even if he wants to steal the cash, he cannot. Why? Because cameras are working. Okay. So in the meantime, both decide. They join each other, cashier and security camera in charge. They join each other. They say, let us do one thing. What is that? We decide that I will switch off the cameras. I will create an issue, error, fault in the cameras, and cameras will not work for next 3-4 days, right? During that time, you will steal $5,000 and you will give half money to me. So employees colluded and bypassed the control, breached the control. So if employees collude, then controls will not work. If employees collude, then controls will not work. Yes. Now, next. The next point is the possibility of controls being bypassed by management. If I'm manager, I am not following control. I am bypassing the control. My team will not follow. My team will not follow. The manager is not considering the control to be important. Why should we take any pain and follow the controls? Why should we do when the boss is not following the control? Simple as that. We should not take any tension of control. Okay, because boss is always right. Right. Next. Then is very important. Controls are designed routine operations and not the non-routine issues. It happens that routine transaction. For example, you purchase goods from Intermart. and you go to them the same day, and they are surprised by the fact when you tell them that I have purchased milk from you, but this milk has bad taste. They say it is not expired. You see the expiry date, but you say you are right, but still this has a bad taste. You can check it. Now, this is something exceptional, non-routine. This is something non-routine. Now, how to deal with it? You do not know, because controls is not placed to control bypassed. What to do with it? Now, next point. So, recording and controls, accounting and control system. So the auditor must keep, yes. So limitations of controls. Tell me, these are clear to you people? Tell me, these are clear? Control weakness so far to everyone? All right. So a student asked, re-explain the last point. I have given one example. I give you another example. Non-routine. You know what happens in the companies? Hackers find some, that unusual way to enter the system. Hackers find unusual way to enter the system. You know that? So basically, which the company has not foreseen before. So this is something non-routine. They find some way to enter the system. Simple as that. I hope it is clear. Now, I hope it is clear to you. Now, just yes. So the next point is, students, we have covered, I told you, come here, that auditor understands the control. Yes. Then auditor documents the control. Then auditor documents the control. Prepare the documentation with himself. Send your question to all. Send your question to all so that everyone can understand what I am asking. Please send to all. Yeah. Remember, when the word auditor is spoken, so it means straightforwardly, we are talking about external audit. When we mean internal audit only when we specifically describe it. When we specifically say, okay, internal audit. Otherwise, yes. Now, I hope it is clear. So the word auditor is always meant to be used for external auditor. Okay. Now, so then document the control documentation. There are 4 ways to document control. Documentation of controls. So controls can be documented. Auditor understand the control, maintain record of that how controls are working. Maintains a record of that with himself. So 4 ways basically there are. Number 1, that is narrative notes. Second, that is flow charts. Third, that is control questionnaires. And then checklist. 4 ways to, yes, record the control. There are 4 ways. There are 4 ways to record control in the company. Now, so the first is narrative notes. So what are the narrative notes? So narrative notes are that I start and I understand the control and record in the form of narration story. That, for example, I record that auditor, the company receives order from the customer a sales order form is filled, and then immediately the staff member checks availability of inventory. This is being written, storytelling form. This all controls are being written. Then goods are dispatched by the store department. For example, a good dispatch note is generated. One is sent to the customer, one copy is sent to the accounts department. Like this, it happens. So students, when auditor records like this, it is called recording of control in the form of narrative notes. Now, flowcharts. Flowcharts, just like that. Purchase department sends purchase order, stores department sends requisition, goods delivered, they issue GRN, one copy to accounts, one copy to them, in the form of chart, in the form of a data flow diagram. This is called flow charting. It gives a good idea of the holistic picture of the controls. You can spot where is the weakness on the diagram. But of course, if you have to fix it, you have to redraft the whole diagram. Downside as well. Now, next. The next point is control questionnaires. What they are? These are the question performers. Not just like that. Just like you now use Google Forms. You do that. Number of students send me, Mr. Hamzah, can you fill it for us? I say, okay. So I repeat. So control questionnaires are questions regarding controls of the company, prepared by auditor. Questionnaires prepared by auditor and filled by the company's employees. We are going to audit this company. We prepared a pro forma and give to the employees. They will fill the form and they will return to us. So we will get the idea of control through that pro forma. So control questionnaires are of two types. One is called internal control questionnaire. The other is called internal control evaluation questionnaire, ICEQ. ICEQ and ICQ. ICEQ and ICQ. Now, so I will explain the both. ICQ, they ask the questions regarding control procedure is working or is in place or not. Is in place or not. For example, they say credit worthiness of example. Credit worthiness of new customers is checked before granting credit sales. This is the ICQ. This is ICQ. This is IC, internal control questionnaire. So the answer, if the answer is yes or no, employee will respond. Now, so in this case, if answer is yes, it means control is working. And if no, it means control is weak. Control is weak. Next. The next point is you see here, credit worthiness of new customer is checked. Yes, very good. No, very bad. Control is weak. So ICEQ, they ask questions regarding effectiveness of control. They ask questions regarding effectiveness of controls. Effectiveness. Yes, if their answer is, if their answer is yes or no. If no, it means control is working. Inverse of that, yes, control is weak, control weakness identified. So inverse of that, inverse of it. Here, yes mean control is working. I will give you example. Note it down, then explain with example. Now, so I will explain. For example here. Can credit sales be granted without checking credit worthiness of customer? If yes, there is weakness. Can credit sales be granted without checking credit worthiness of customer? Now, so another example. So one before example. So student ICEQ, they are ICEQ. They are designed about objectives, control objectives of control. They talk about that. And I told you objectives may be different, same, objective may be same in different organization. Way of achieving maybe just an example of wearing cold jacket, sweater, long coat. Similarly, authorization process, authorization should happen. Now, method may be different in different companies. Objective is there. Objective is same. So ICEQ, they talk about objectives of controls. So now I will write something here. New employees are set up by only HR department. Question: can new employees be set up without involvement of HR department? A and B. You will tell me, think, which one is ICQ and which one is ICEQ? Which one out of these two? Tell me the answer, please. Exactly. A is the ICQ, B is the ICEQ. Is it clear to everyone? Right. Now, so let us proceed further. So let us proceed further. So we have covered narrative notes, flowcharts, questionnaires. Questionnaires have some tricky advantage, disadvantage. I want to discuss these with you. ICQ, ICEQ examples are also given here. You can read it yourself at home. These advantage, disadvantage are important and a bit tricky. Other are easy. So I want to discuss these with you. Now, so if drafted thoroughly, they can, yes, advantages of both. Exactly. Quick to prepare, easy to use, very important. ICEQ are based on objectives, so can be applied to variety of system as compared to ICQ. ICQ talk about the control, specific control. ICQ talk about ICQ talk, I repeat my words. ICQ talk about specific control. So they cannot be applied to variety. Because objectives are same, but controls may be different. I already told you. So it enable ICEQ talks about effectiveness. Objective is being achieved. So it helps to identify which controls are strong and which are deficiency. If controls are weak, ICEQ will highlight. It will highlight. Now, the next is The principal disadvantage is that if they can be drafted vaguely, yes, misunderstood. Large number of irrelevant controls may not include unusual circumstances. Of course, I have already very important. The client, who fills the control forms? Company employees. They may fill it like that. They may be overstating. They may not be telling the truth. They might be telling lie to us. Now, the next point is checklist. Checklist. Oh, sorry, just one more thing. This one. Students, they say control questionnaire. There are 10 questions, 100 questions. Some are very important controls, which are related to 5 questions are regarding very important amount of a non-current assets. The other are about small items. But when we say only for 5 questions, they replied negatively. They said controls are not working. All 95% is okay. But those 5 are very much important. But this is a drawback, that it gives the impression all controls are of equal weight. This is wrong. All controls are not of equal weight. Some are very important and more important than others. Checklist. What is checklist? Checklist is like that. I have prepared a list of controls. I'm auditor. The list of control which should be present. I go to the company, control 1 present, yes, tick. Control 2 present, yes, tick. So checklist. So auditor can tick that now. So students, so documentation of control is done. The next is walkthrough test. What is walkthrough test? So walkthrough test is performed by auditor. It is performed by auditor. To confirm his or her own understanding of controls of company. I will explain. I understood the control. I documented with me, recorded. Then I say what I have understood and what I have recorded, whether my understanding of company's control is good, bad, right, or wrong. So students, so I have recorded the control that this is working in this and this way. Now I check, I pick one transaction and trace that throughout the company's system to see that whether the control is operating in the same way which I understood, which I understood. It is operating in the similar way in the company system or in some different way. Now, so this is called walkthrough test. So transaction is some transactions are picked and traced through companies system. Yes. Now, so student walkthrough test is done. So let us proceed further. So let us proceed further. Now, so students, we have learned all these steps, 3 steps: documentation, understanding of control, documentation, and walkthrough test. Now we need to understand the test of controls and different transaction cycles. You know, let us try to understand some with some story. In our part of our syllabus, there is sales cycle, purchase cycle, there is inventory, cash and bank, payroll, non-current asset or capital expenditure. These are part of our syllabus: 3, 4, 5, and 6. For different organizations, the practical step to conduct a sale may be different, but objectives may be same. That revenue should be recorded correctly, timely, completely, as per IFRS 15. So objectives may be same. Sale purchases should be authorized. Bogus purchases should be avoided. Avoid excessive stock. Purchases I'm talking about, right? So goods accepted of quality. payment time you could purchase it at correct amount, purchase it at comparative prices, and recorded in the correct accounting period. So these are the different objectives so these are the objectives of all control objectives. All these transaction cycle are normally same for different organizations, but practical controls to achieve those objectives may be different. That may be different for different organization. Now, next. So that's why whatever I teach you about any cycle, whatever you find in the book Kaplan, in the BPP, on the ACCA website, that assumed practical controls may be different. And we are teaching you here in an exam scenario may be different. What you have to understand, you need to understand that our control objectives and control procedure, what is the link between the both? What is the link between the both? Now, tell me. So, I asked you one thing. Which one is more important, objective or control procedure? So controls, they are also called controls. Control objectives or control procedure, which one is more important? I loved your message. The first message, Ali Hussain. I don't know what is your actual name. Here it is being shown like this. Second, I differ with the second one. Yeah. It is Ali Hussein, right? Ali Hussein. Yeah, Ali Hussein. Right. So, Ali Hussein, the first message is lethal, wonderful. I loved it. Control objective is the target. Controls are surrounding it. They want to achieve the objective. Control is the practical step to achieve that. Both are important. Both are, we cannot say this. Yes, objective is important because sometimes control procedure itself, when it becomes weak, it is bypassed. It is not achieving the objective. So just like that, security guard at the gate of the building. What is the objective? For the safety, to avoid unauthorized access to the building, right? This is the purpose of the security guard. Objective. Now, if security guard is there, he is working there, he is present, but still some people, they find a way, they deceive security guard and enter the building without getting, authorized, did they have unauthorized access? So control is there, objective is not being achieved. So what we have to do with this control, which is not achieving the objective? I am wearing a jacket, but that is torn, it is not keeping me warm. So what is the use of that jacket for the sake of jacket? I'm sorry to say, if I'm wearing a dress, why do we wear a dress? 2-3 purposes. That you have to hide your body's private parts. You want to look good, right? Presentable. Anyone. So if the purpose is not being achieved, then what is the use of the dress? I hope you got the point. So controls are important when they are achieving the objective. When the controls are not achieving the objective, they are worthless. They're just a burden. They're just an activity which is costly for the business. Now, so let us proceed further. So students, that's why I told you one more thing a few minutes ago, that objective may be same and can be achieved by different ways in different organizations. Objective is more important, and controls are only important when they are achieving the objective. Otherwise, they are some costly exercise which is not giving any benefit So now let us talk about sales cycle. Normally, I have considered this. Sales order is received, goods are dispatched, and here recorded sales recorded as well in accounts. Okay, right? Sales invoice issued, payment received and recorded. 4-stage process I have considered, 4-step process. Now, the next point is, so sales order is received. So the objective is that, when the customer places the order, customer comes or makes a call. The purpose is only goods which are available in stock, order is accepted for those. Yes. So a company has implemented a system that whenever a customer comes, asks for goods, they check the stock and then say, okay, accept it if it is available. Very good. Practical step to achieve it. Another company, they say, customer, our system is online. You sit at home, you place order online. So customer open the website and enter 10 items. This is sorry, 10 items not available. Immediately, website tells. What is that? The website is integrated with inventory system. It automatically checks stock available. No, they say sorry. They reject order immediately. They don't proceed. You have seen that it is written out of stock. So immediately you cannot place order for this number of goods, items. Now, so I repeat. So students, 2 different companies using different way to achieve same objective. To achieve same objective. Then, appropriate record of orders received. If it is a manual system, we ask fill a form, detailed form, so that no detail is missed. Standardized form. And that form should have sequential numbering. Okay? Sequential numbering, so that no form is misplaced. And normally, sale order form has 4 copies of sales order form. Why? Now you see here, sale department. I will try to draw the whole process here. Stores department and accounts department and customer. See here, customer comes. So sales order form is filled, 4 copies. 1 copy is retained here. Tick mark means retained here. Okay, this tick mark means 1 copy is retained at sale department. 1 copy is sent to 1 copy here, accounts department. This order received. 1 copy sent to store department. That this is the order you have to dispatch. And 1 copy to the customer to confirmation that you have placed this order with us. So 4 copies of sales order. Okay, now listen. Next. Stores department prepares the order and good dispatch note is prepared, again 4 copies. So one person pack the goods, the other check that with the sale order copy that the correct goods have been packed. Then the goods are dispatched. Goods dispatched. I told you, one person packed the goods, other counter checked with the sale order copy. And both sign GDN. Both sign GDN. So one copy of GDN is sent to the customer with one copy of GDN. Now, sent. So one copy of GDN is sent here to accounts. One copy is retained here, I told you. And one copy is sent here to sale order department. Now listen. The purpose of these 4 copies. Listen, focus. Sale order department check GDN and the sale order copy they have. They match. They say, okay, order fulfilled properly. So file closed when they match it with the sale order copy. Okay. Accounts department receive one copy of GDN, one copy of sale order. Now, based on that, they also match what was ordered, the same dispatched. Then on the basis of that, they issue invoice, sales invoice after batching the both. And that is one copy is sent to customer, sale invoice. One copy is retained by themselves. Accounts. And if it is credit sale, of course, it is recorded. Now, next. So GDN has sent one copy to the customer. Good dispatch, GDN. Customer received the goods. Customer sign GDN copy and send back to the company. It is a proof customer has received the goods. You see, that signed copy is also kept in record, normally in accounts or stores. You see, 4 copies of GDN, 4 copies of sale order, and 2 or 3 copies of sale invoice as well. Normally 3 copies, I think. Yes. This is how controls work, which I have envisioned. In some other company, it may work in a different way. I hope you understand. Now, so come to the, you see, appropriate record of order received. How to achieve it? On a standardized form, order form. Order form. Order form should be sequentially pre-numbered so that it is not misplaced. Then credit sale should be made to the credit worthy customer. Yes, if it is credit sale. So we perform credit check for new customer, get information. And for new customer, reference is obtained. We say, who will give you your information to us? So the next is define the credit limit policy. So that appropriate credit limit for new customer, credit limit will be approved by the senior management. Senior management. Now, the next point is goods are dispatched. So goods ordered are dispatched. What customer have? So goods should be counter checked by a specific person with sales order. You know, I told you. And the person who's packing and who is checking, both should sign the GDN. Same, I have told you the story. So this objective is achieved by this. Sale invoice should be issued for good dispatched. Invoice should be prepared with a copy of GDN with match by 2 persons. Both should sign invoice, prepared by, reviewed by. Yes. Safety of cash or check received by post. Normally it is now rare by post. So it is given here, it's okay. 2% should open the post. That's it. Appropriate record of cash received. A pre-numbered, multi-copied receipt should be issued. Should be issued in the name of person depositing the cash. Now, so similarly, purchase system, how it works. You know, purchase system, how it works. Listen, which I assume, stores department, purchase department, and supplier. And then accounts department. So they prepare purchase requisition. Stores department. They prepare purchase requisition. 4 copies again. 1 copy retained, 1 copy sent to purchase department, 1 copy sent to accounts department. Yes, 3 copies here, not 4. Yes, purchase requisition are 3 copies. Yes, so 3. Now, purchase department receive requisition. They prepare purchase order, which is approved by senior manager, purchase manager. It has 4 copies. 1 copy retained. 1 copy sent to supplier. 1 copy sent to accounts department, and 1 copy sent to store department. Purchase order. Now, supplier. Supplier delivers goods. Yes. When goods are delivered here, goods are checked for quality and quantity. They are matched with this copy of purchase order. Goods are checked. What we ordered, that is being received. and goods receive note, 4 copies are generated. 1 copy kept here at stores, 1 copy is sent to accounts, 1 copy sent to supplier. Yes, we received it. 1 copy sent to ordering department, purchase department. 4 copies. Purchase department see, okay, goods received. What was ordered, they match with the order and they close the file. Purchase order file. Yes, goods have received, done. They match it. Accounts department match 3 documents: purchase requisition, purchase order, GRN. 1, 2, 3, and then supplier sends invoice to. So accounts department match all the documents. Then they prepare a payment voucher, which is approved by the manager. One person prepare, check all the documents, and then which is approved by the senior management. And check is prepared or online transfer this time. Anyone, any question? Is that clear to you guys? Tell me. Is it clear? Tell me, please. So far. So I would suggest to you, because I have done more than my target for today. So purchase system, control objective, and control. How controls are achieving objectives? It is your home assignment. I will be discussing with you in the next class, but you have to do this at home. Third column, I'm not discussing. It is a topic for the next class. Third column, even in the sale, I have not discussed. Test of controls. So please prepare it well at home, and then we will meet in the next class on the next Wednesday. Wednesday, we have to cover all 6, which I have topics listed down. All 6. I will complete these 6 in the next class. I'm telling you. Controls, objective, and control procedure. What is the link? How control is achieving the objective. If control is not achieving the objective, it means control is of no use. This is linkage we need to understand, and you have to understand. Okay, so that's it for today. Anyone, any question? All right, so thank you. See you next Wednesday. Till then, take care. Goodbye. Goodbye. Thank you.